Paycom Software, trading under the ticker symbol PAYC on the New York Stock Exchange, used to be a high-flying tech darling. As the company saw its share price soar past the $500 mark in 2021, representing a 3,571% gain from its IPO price of $14 a share back in 2014. Today, however, the stock of this payroll solutions provider is down 73% from that peak and now trading in the $140 to $150 range. So in this video, we are going to explore the factors behind Paycom's spectacular stock decline, and we will discuss whether this software name's poor stock performance represents an interesting opportunity for quality-focused long-term investors. So without further ado, let's get started. Alright, hi there, my name is René Salman and this channel is all about quality investing. And let's start by taking a look at the stock charts and the more recent stock performance of Paycom's stock. So the stock of Paycom is actually down 30% over the course of 2024, so year to date. The stock is down 55% over a 1 year period. And if we look at the peak of the stock that was reached in late 2021, well, ever since, the stock is down as much as almost 74%. However, if you take a longer term view, despite this tremendous sell-off, the stock did very well for long-term shareholders regardless. The stock actually compounded at a rate of 27% since IPOing, and basically 10x investors who were holding the stock for the entire 10-year period. So as many of you will know, stock declines can represent interesting opportunities as long as the underlying business is still intact and doing well. So what I want to do next is take a look at how the business of Paycom has done over the last couple of years. And here are some of the highlights that I have found. So first of all, the number of clients of Paycom's software solutions, Paycom's payroll solutions, and we'll get to that in just a second. Well, that number is definitely trending upward and growing. Moreover, Paycom is posting very high industry-leading gross margins of around 80%, or I should say above 80%, which is a mark that not all of Paycom's competitors are able to cross. Then moreover, if we look at how revenue developed ever since 2012, well, we can see that revenue grew from around $76 million in 2012 to $1.7 billion today. So that's, again, insane growth, which justifies the very good long-term stock performance and even represents a compounded annual growth rate of 33%. Now, if we look at the underlying profit metrics, and I'll focus on the operating profit metric here, we can see that the operating profit margin actually expanded from 8% back in 2012, so that would be 6 million on a 76 million revenue, to 33% in 2023, representing more than 500 million and almost $600 million in operating income. And as a result, the operating profit grew at an even faster rate than the revenue at a compounded annual growth rate of more than 50%. Again, this is absolutely staggering and impressive. And if the operating profit is doing so well, again, operating profit margins certainly above 20% in the more recent years, it should come as no surprise that the company is also earning a very good return on capital, which has been hovering around between 20% and 30% in most years. Now, as of today, just to complete this brief overview picture, Paycom is also paying a dividend. As of today, Paycom pays out 18.4% of its profits as a dividend, giving investors a dividend yield of around 1%, obviously depending on your purchase price. Now, why is the stock of Paycom down? I think there are two main reasons. One is that growth has been slowing. And if you couple that with maybe a valuation multiple that's a little too high, obviously this is a recipe for a poor short-term stock performance. Now, let me just show you the year-over-year revenue growth rates on a quarterly basis here. And well, yeah, you can identify a significant slowdown over the course of the more recent quarters. On top of that, the company also missed guidance in past quarters. For example, the shares of Paycom dropped 38% after market hours after they published their Q3 2023 results. Now, on top of that, Paycom is also guiding for slower growth going forward. Paycom guided to 10 to 12% revenue growth in its 2024 fiscal year, which represents more than half of its 3-year compounded annual growth rate revenue growth rate of 25%. So that's the first reason why the stock is down. in my opinion. And I think the other reason is the rollout of a new solution that Paycom launched fairly recently. It's called Betty, and I'll talk more about what this offering is all about later in the video. But let me just say right here that this offering is cannibalizing some of Paycom's legacy services. So before we get to Betty, let me just very briefly introduce the business model of Paycom. How does that company or this company actually make money? So Paycom was founded in 1998 in Oklahoma City. It went public in 2014 on the New York Stock Exchange, and it was founded by Chad Richardson, who still runs the company as the CEO today. And effectively, Paycom is simplifying HR, so human resources services and tasks, by providing various tools to automate the process. So in HR speech, that would mean that Paycom is offering cloud-based human capital management. So that's HCM solutions. That, and now that's important, are delivered as a software as a service offering. So basically that's a subscription model. Some of the customers of Paycom pay Paycom on a per user basis. And what I find quite fascinating about Paycom, I just said mainly they are offering a subscription service, is that 98% of Paycom's revenue is actually of recurring nature. And obviously as investors, we love to see that because recurring revenue is easier to forecast, easier to predict, which makes valuing Paycom a whole lot easier. Yeah, and that's really it. That's Paycom's business model. I think it's fairly straightforward, isn't it? Now I'm going to add some more details here. Well, I think what's important to be aware of is that Paycom is mainly focused on the small and mid-sized companies market, so the SME market. It's, as of today, mainly focused on businesses operating in the United States. And I would say that their system, or at least that's what I have read, I have no first-hand experience, I think their offering works best or is best suited for companies with around 50 to maybe 1,000 employees. But of course, Paycom is also expanding. They are trying to target also larger enterprises going forward. And they also have some plans to expand their product offerings internationally. And again, I'll talk about this a little later in the video. Now, if we look at the history of Paycom, I think it's important to point out that Paycom started off as a company with simple payroll solutions. So that would be payroll processing, maybe payroll tax filings, and so on and so forth. But nowadays, the company has turned into a full suite HR software company, offering a full suite of different offerings. They call it modules that companies can add to their, effectively contract they have with Paycom. So some of the other modules that I think are worth highlighting would be a benefits administration module. There's an employee information management system. There's a talent acquisition module that basically offers companies tools for recruiting, application processes, and onboarding. Well, I just said onboarding. They have onboarding and offboarding offers. There's a talent management module, a time tracking and labor management module that allows to track time, scheduling, labor allocation. You get the idea. Yeah, and if you're now wondering what problem Paycom is actually solving, well, many companies, even today in 2024, are still struggling with paper-based and manual processes in their HR departments. And of course, this leads to errors, wasted time, inefficiencies, and maybe most importantly, also a lack of transparency. Of course, companies will also have to comply with a variety of legal requirements. And if you make errors here, this can be costly for companies too. And essentially, Paycom is helping all of their customers overcoming these difficulties. And I think the fact that they are offering cloud-based solutions is worth stressing again, because nowadays, of course, employees want to access important information and also tools from anywhere, also from home, I guess. All right, so earlier I said that we are focused on quality companies for the most part. So let's highlight why Paycom, in my opinion at least, is a quality company. Well, the market for HCM offerings is fast moving. It's highly competitive. It's subject to changing technology. So you may wonder what is actually protecting Paycom's business going forward. And I think two things are worth pointing out here. So first of all, in my opinion, the primary structural moat that Paycom possesses that protects it from competition is the fact that there's some stickiness to their product. So we're speaking of a switching cost mode. When I was doing some research for this video, I was reading that, and I'm sure you're familiar with that phrase, that nothing is certain in life except for death and taxes. And now here's the punchline. For businesses, there may be a third thing that's certain in life, payroll. And I would argue, as I just said, as a B2B offering, it takes some time to integrate all of the Paycom solutions into a company's systems, and this creates switching costs. It's just time and money consuming to switch to a competing product. And why would you switch in the first place if you are happy with your current offering, if the price is fair and your employees are happy too? I think what I should say here, and that's important when we are speaking about switching cost, is that Paycom doesn't allow integrating the data Paycom collects into third-party solutions. So it's a closed system. And instead, it's encouraging customers to add new modules within the whole Paycom platform universe. And I've read that Paycom actually keeps 94% of its customers annually, which I think is quite a decent raise, and once again underscores the stickiness that I was just talking about. And keep in mind again that 98% of Paycom's revenue is of recurring nature. Now we're saying that I think two things protect Paycom from competition. I just mentioned switching costs, and here's the other thing. I think Paycom possesses a very unique company culture. And obviously, company culture, that's kind of a soft metric to track. But I can only encourage you to listen to the CEO, Chad Richardson, talk about the company and its culture. And a few things stood out to me. The first thing is that I think the CEO and the whole company truly cares about offering the best possible tools and value to its customers. So it's incredibly customer focused. And obviously the whole HCM space the competition is surrounding features like service quality, product quality, scope of the services offered, and of course also price. And let me just share one quote from Chad Richardson that I think backs this up. So he once said in one of the more recent earnings calls that, quote unquote, we are making strategic performance and client value decisions that we feel are best for our long-term relationship with our clients. Our mission is to ensure and achieve client value, and that is our focus. Well, and I guess in this context, we now have to spend some more time talking about the new HR platform, Betty, that Paycom launched fairly recently, I think in 2021, but they're still in the process of rolling it out to all of their customers and also new customers, of course. And Betty, in case you're wondering, stands for Better Employee Transaction Interface. So again, what's the goal of this? Well, the goal is to provide more value, to provide a higher return for Paycom's customers. And effectively, it allows employees to handle their own payroll themselves directly through the Paycom software. So it essentially tasks employees with entering or confirming their payroll information, such as the hours worked, when they were taking time off, benefits, and so on and so forth. And I think this fundamental shift, I think it's worth highlighting that this is a true paradigm shift. It's revolutionizing the approach in the HCM space. I think this, you may call it game changer. It provides a win-win-win proposition. So first of all, I think it's a win for the HR departments of Paycom's customers, of course, because it saves those departments resources. It's creating efficiencies, and essentially Paycom customers can leverage their employee base. Then, of course, as many things are automated, it will prevent human errors. And in one of the more recent earnings calls, the CEO also highlighted that many people working in HR departments, they are people pleasers. They are having a hard time saying no. And so in a way, the Betty system enforces that the rules the company actually has are actually applied, which again saves the company money. Then secondly, I would also argue it provides a win proposition for the employees. Of course, not only are employees now getting more educated about what the payroll processes, what all of this actually involves. Now it's also more transparent, and I think it will create trust between employee and employer. And personally, my understanding is that this is, as I said, a great proposition for everyone involved here. And I think some of the competitors of Paycom, they will have to follow suit eventually. And the fact that Paycom is now kind of the first mover here may actually be an advantage if you take a long-term view. And finally, I think it's also a win for Paycom. Again, if you take a long-term view, because I think, and again, correct me in the comments if I'm wrong, but I think it increases the stickiness of the Paycom software platform, the whole Paycom ecosystem. And I think it creates goodwill with the Paycom customers. Because as I just said, I think the customers will earn a higher return on their investment in Paycom software solutions. They will see that everyone is engaged and they will see better outcomes. Again, let me just show you or read to you a quote from Chad Richardson. He said, I believe that if we're out there selling a product that we know is going to produce less ROI, so that would be Paycom's legacy offerings, than our best product, and now he's referring to Betty, I don't know that we could pat ourselves on the back for that. I mean, the passion for Betty is it really does drive a significant amount of ROI as well as usage within the system for the client. It's inherent that when someone's using Betty, they're going to utilize the rest of the system because it's impossible to do one without the other. However, again, and that's why the stock is down over the more recent timeframes, it also reduces Paycom's revenue per customer. Of course, it's effectively eliminating certain billable items that Paycom could charge customers for in the past with its legacy offerings. But again, I know there's the risk that I keep repeating myself. If you have a long-term view, I think the bet that the management is making here is the right one. So what I shared on Twitter the other day, and I actually shared it a couple of months ago, I think, is that many investors, they praise companies that have the quote-unquote capacity to suffer. So the willingness to take on short-term risk and also accept lower profitability in the short term to provide better value to customers and to increase the profitability and profits in general, maybe over the long run. However, in reality, if investors are owning stocks that are making long-term bets, I guess other companies that come to mind here are Amazon and Meta Platforms. Wise is another company. Well, they find it inconvenient to sit through these reinvestment cycles as owners of the stock, and they just sell it. All right, and then maybe finally, I was just talking about company culture and the focus on customers. Another thing that stood out to me is the cost consciousness that the management team keeps stressing. So again, another quote here to back this up. And so we value our spend. We don't spend, again, I started the company with an SBA loan and 13 credit cards. So old habits don't die hard from that perspective. We don't have a lot of waste in our model. And so there's a reason why we've had high margins. We don't like to be dependent upon banks and other things to run our company. And so that's not going to change from us from that perspective. Just to remind you of what we were and are talking about here, we are talking about why Paycom, I think, is a superior business. And just to wrap it up here, let me just say that Paycom's balance sheet is almost debt-free too, and Paycom has historically also earned a high return on reinvestments. Which brings me to the last chapter of this video, valuation. What price and what valuation is Paycom trading at as of today? So as of today, and I'm going to show you a couple of charts now, Paycom is trading at an EV to last 12 month operating income multiple of 13.5, which is relatively cheap and certainly cheap relative to Paycom's own stock history. Then on a free cash flow basis, and I think that's important, the stock is actually looking less attractive as the stock trades at 27 times next 12 month free cash flow. And again, this is something that I will actually address in a future video. I will highlight some of the risks that come with an investment in Paycom. I think one of the things that is worth analyzing and understanding is the poor cash flow conversion. So there's a major discrepancy between the operating income generated by Paycom and the free cash flow generated by the business. So if you don't want to miss out on that, make sure to subscribe to the channel. Then Paycom is also trading at a relatively attractive valuation compared to its peers. So what I'm going to show you on screen right now is the price to sales ratio Paycom is trading at compared to, I think, 3 of its peers. Now, as we have discussed, growth has definitely slowed. Now, the question is, can growth reaccelerate? And I think what's worth understanding is what are going to be the key growth drivers for a company like Paycom? And I've identified 3. So I think growth can primarily come from growing the number of clients that Paycom has. As of today, there are 33 million small to medium-sized businesses that are operating in the United States. And Paycom has been grabbing market share for over 20 years now by simply offering a better product than competitors. Then the second means of growing revenue and profits would be to simply increase prices. So what I think is worth highlighting here is that smaller companies, so those are Paycom's core customers, actually more price sensitive than larger enterprises who mainly care about the scope of tools offered by the software provider. And then lastly, the last means of growing revenue and profits would be to cross-sell products within the Paycom platform. Just to show that I think there is still a lot of runway for growth for Paycom, let me highlight that the Paycom CEO has actually said himself that he thinks Paycom has only captured around 5% of its total addressable market. And if they successfully manage to offer products, software products also abroad, so globally, this will of course significantly increase the total addressable market too. However, I wouldn't want to make that thesis, or the fact that Paycom will be able to successfully expand its offerings internationally. I wouldn't want to make this an integral part of my bet on Paycom, because obviously expanding offerings internationally also comes with risks. There are different regulatory frameworks, there are already established existing players, there are cultural differences, and so on and so forth. And we've seen many businesses in the past who were not successful in expanding to other regions around the world. Nonetheless, I think at an operating income multiple of 13, you don't need a whole lot of growth for the investment to do well. I will address the risk of free cash flow being significantly lower. So as I said, on a free cash flow basis, the stock looks much less attractive than on an operating income basis. But we'll talk about this in a future video. So I guess I'll wrap it up here for today. Let me know what you think of Paycom stock in the comments down below, and I'll talk to you soon. Take care.